What's going on, everybody? Liam O'Reilly, Vermont Economic Realtor. Hope you're doing well. Talking today about the Federal Reserve, how it's losing money now consistently because of the rate hikes that were done in 2022. What's going on, why they're losing money, and how that affects the housing market, or how that could affect the housing market as we move into the future here. So let's get right into the story. Why the Fed is bankrupt and why it means more inflation. This article comes out of the Mises Wire, part of the Mises Institute. So here we go. Nevertheless, talking about this line right here, the reality is the Fed's assets are losing value at the same time that the Fed is paying out more in interest than it is making in interest income, right? So the Federal Reserve on their balance sheet holds a they hold treasuries, they hold U.S. securities, and they make interest off of these assets that they hold, right? When interest rates were low, when mortgage rates were low, the Federal Reserve was purchasing those mortgage-backed securities and willing to take a return of, for example, 2.7%. I know we've all heard about mortgages being written, or maybe know people who got mortgages at that 2.7% rate, right? The Federal Reserve was buying these mortgage-backed securities at that rate because they weren't concerned about getting a return on their investment. So now what's happening is this is a great example, I think. Imagine if all their assets were being paid at a 2.7% interest rate. The income that they're making from those assets isn't going to be enough to pay for the money that they're guaranteeing in both their deposit facilities and the reverse repo facilities that institutions are encouraged to put their money in. This 2.7% mortgage that the borrower is paying to the Federal Reserve every month is not going to cover the 4.5% rate that the Federal Reserve is guaranteeing to the people, to their depositors, and through their reverse repo facility, right? So they're losing money because of that. The interest that they're making is not enough to pay for the interest that they are paying out. So that's basically what's going on in a nutshell. We can look at the chart here. So usually what this chart is showing, usually what happens is the blue lines are when the Federal Reserve makes money on their deposit, right? So you can see in 2022, they still had a net positive year because they didn't start losing money until around September or so. And you can see in the past years, they had not run at a deficit. So 109 million, 86 million, or excuse me, billion. These are in billions of dollars. 54 billion, 62 billion. You can see in those charts, that's kind of going down from 2021 to 2018 are the numbers that I read off. And so that money that was net profit from the Federal Reserve, they don't get to keep that. That goes to the U.S. Treasury and into the U.S. economy, right? The government gets that money. The government gets to spend that money. But now, when we come into 2022 and the Fed is running at a deficit, essentially what they're saying is, I'm going to go to the Federal Reserve website so we can just read it right from them. This highlighted section here. During a period when earnings are not sufficient to provide for those costs, a deferred asset is recorded. The deferred asset is the amount of net earnings the Reserve banks will need to realize before their remittances, I'm sorry for my reading, guys, to the U.S. Treasuries resume. So essentially what they're saying there is they're going to continue to pay their interest rate, run at a deficit, record their deficit, and then when eventually things turn profitable again, either through rates dropping or them acquiring more assets, whatever it may be, they're going to repay their deficit before paying the U.S. Treasury. So what does that mean for the U.S. economy in general, and what does that do to the overall money supply? In my opinion, when I see that, I think of it as inflationary, right? The Federal Reserve essentially is saying, look, we don't have the income to pay the interest that we have promised. So instead of using incoming money for it, we're gonna use the incoming money that we're getting, but we're also going to just pay you anyway, which is essentially printing money. Unless, I mean, I don't think there's any other way to look at it. It's a big credit card, and they're paying money, and they're not lending money or borrowing it from anybody else. They're borrowing it from themselves, paying it to these institutions, and keeping money, circulating in the economy. And we'll see how this affects the overall monetary supply. But in my opinion, this could be inflationary because they're adding more money to the system just naturally. They're giving more money to the big banks who are keeping it at the Federal Reserve, and who are in their repo facility. They're guaranteeing this interest rate, and they can't afford to pay it through their assets, so they're running at a deficit, borrowing from themselves, and paying that interest rate anyway. So, what does this mean for the housing market? What does this mean for the future of the housing market and mortgage rates? In my opinion, the Federal Reserve cannot operate like this forever, right? They cannot run at a deficit indefinitely. Then they're just printing money into the system, and they're not paying it back. So I think they're going to have to turn it around at some point. Now, I say that, I'm sure people thought the US government would start to turn things around at some point as well with their deficit and our, I'm a US citizen, our national debt. So my assumption is that the Federal Reserve is going to have to become profitable again. They're going to have to repay their deficit, and and start running at a profit, and not just adding money into the economy. So how do they do that? They can either lower interest rates, which would reduce the obligation, reduce the amount of money that they have to pay to people who keep their money at their facilities, or they can add to their balance sheet and they can add assets, both of which, in my opinion, will make mortgage rates drop. So, it's I guess it's really only a matter of time before mortgage rates come back down. We'll see how long the Federal Reserve can operate at a deficit, but I mean it can't go on forever. I don't think. I don't think as an institution they can run at a deficit forever. I don't think that's something that in my mind would be very inflationary for the US economy. Now we'll see what happens. We'll see if it has any inflationary impact. But in my mind, I think the Federal Reserve is going to have to drop rates or increase their balance sheet probably sooner rather than later. And when rates come down, more buyers are going to flood into the market, and home prices, especially in areas that are tight, where there's not much supply and there's a lot of demand, like here in Vermont, are going to continue to increase and skyrocket. Because remember, right now with interest rates being high, it's more expensive for builders to go out there and bring new supply to the market. It's more expensive for builders to know that it's more risky for builders, because it's tough to know if that buyer will be there when they finish their product, when they finish their build. So there's a little bit less building going on right now because of these higher rates. And eventually the Federal Reserve is going to have to pivot. They're going to have to start operating profitably, start paying back their deficit, which I think is, and that's taking money out of the system, right? They're not making a profit and giving that to the US Treasury, who's spending that into the economy. They are just making a profit and taking that money and using that to pay back their deficit, to bring the money supply back to where they wanted to. I guess they could just run at a deficit and then forgive that deficit if they wanted to. Who knows? It seems like these institutions, the Federal Reserve and the government, can kind of change the rules and bend it as they see fit. So that's always a possibility as well. But anyway, let me know what you guys think. What is going to happen with the U.S. Treasury, or not the U.S. Treasury, with the Federal Reserve running at a deficit? What's their solution going to be? I would love to know your thoughts in the comments. All my contact information is listed below. If you are interested in buying a home or selling a home here in Vermont, please reach out to me. I would be happy to help you. If you are looking in another state, please reach out to me as well. I'd be happy to find you a great realtor in the area that you're looking in. Anyways, Lee Morale, Vermont Economic Realtor. I'll see you guys in the next one.